Hello traders and welcome to my YouTube channel IPDATrader. Now this right here that you're seeing is the best trade that I executed this week. And it was executed using a few different things that we're going to be going over today. First of all, before we dive into that, I just wanted to quickly apologize for my absence. I have really been working very hard on my edge. I've really changed the way that I do things. I've traded different pairs now. I trade different time frames as well now. And I'm gonna be slowly but surely be updating you guys on everything that I do now on this YouTube channel. It's using the same principles, mostly liquidity, but there has been quite a few changes. And for this particular first video on my comeback, I wanted to go through the best trade that I had this week. Now, I also had some losing trades, but for this educational video, I think it's best to illustrate this particular winning trade that was on the GBP CAT. You're currently looking at the 5-minute time frame, which is what was executed for the entry, and I'm going to be going through the pattern that I used to take this trade, which is actually rather straightforward. Nonetheless, we're going to be going through everything. Why the stop loss was here, what this level means, which was the target, and most important of all, what this level in red means. So if you want to learn everything about this trade, make sure that you stick to the entire video because we're going to be going through this very in depth. So without any further ado, let's get started with today's episode. Alright everybody, so I brought you back here to the whiteboard. We're going to be covering everything about the trade first on the whiteboard here with technical explanations, and once we're done with it, we're going to be jumping right back into the charts so that we can take a better look and reaffirm what has been learned in this lesson. Now, in order to do so, what I'm actually going to do first is draw a potential market over here. We're gonna be having something like this unfolding. So let's say um, we have a market like this, and we're at this spot over here. So once again, in order to understand the pattern that we're gonna be going through, you first, and more importantly, need to understand when to use the pattern, okay? And in the past, I've talked about the order block theory. I've talked about origin blocks, breaker block, things like that. I no longer refer to those areas in the marketplace as such. I've simplified everything that I do, and I mostly use levels that are naked wicks, which I've spoken about in the past as well, which is essentially a variant of the order block. It's just a way easier method to be trading these kinds of areas in the market. So once again, let's say you're correctly identifying in this particular case that this is your last impulse over here to the downside, which cleared a major swing high on the left, which broke market structure here, and you're saying to yourself, okay, I'm gonna be, let's bring that back in. I'm gonna be waiting for a discount in order to go short, right? Because if once again, if you fib the leg high here and the leg low here, you should be getting the 50% maybe around here. You're gonna be looking for sales above the 50% to go back down. And once again, we're going to be covering targets as well in a second. Just bear with me here because everything is going to be making sense in a bit. So we understand that, right? We have our impulse leg, which is this leg over here coming down, if you can see that, which is from this high to this low. And now we're fibbing the leg in order to give us the discount and premium area of the impulse leg. Once we've understood that, we then need to determine our levels that we want to be doing business at. And once again, I've simplified it to a naked wick, which in this case would be something like this, an untested wick, right? It would be the case where you have a wick low if you're looking for a bearish wick level that has not seen a mitigation yet. So meaning the next candle does not trade into it. It rather, let me actually grab the correct thing. It actually rather just drops. So this remains untaken. And if this happens, as an example over here, because this impulse down is very impulsive as such, right? And the next candle just drops and you get this naked wick here at a previous level of inflection, which we're going to be covering as well in future videos. We can obviously see that we had previous lows here. The market drops through the previous lows. It never taps the wick low here that is formed. And once again, I know it may be confusing, but you will understand all of it in a second as we jump back into the charts. But we then leave this wick untested. This is going to be, you're going to draw a line there. And this is going to be the area where you're going to be looking to go short if it is a discount, if you have the impulse leg, if the swing has been cleared, and if market structure is indeed showing you that we're going bearish. Okay, but this is just a simple explanation of the level. Why I no longer use areas like this, and I much rather prefer areas like this to trade, which are naked wicks. So once we understand that and we now know where we want to be looking for this pattern, I'm going to be showing you the pattern. So let's say that this is the area that we decide that we want to go short the market and we want to anticipate once again, and this is all to do with targeting maybe on the way up, right? We very clearly leave an untested wick high in this case over here. So you're going to be playing because once again, you're not too smart and you want to make sure that you're taking profits accordingly. You're playing from this level here, which is the wick low, to this level here, which is the previous wick high that has not been tested yet. So your trade, it's from this level to this level, nothing more. You're not saying to yourself, hey, this is going to fall 300 pips for me. You're not saying to yourself, hey, I'm going to hold this forever. You're just simply playing from one level to the next. And that's if you want to have a high probability trade, which is what I would always advise you to do. So that's that. Let's dive into the pattern. Let's actually do that in blue. So this is the level here. In this case, I'm going to use a rectangle, but you're going to see a single horizontal line on my chart. But just for illustrating purposes, we're going to be drawing it out over here. Okay, so the market is right here. And once again, guys, this applies because I use these levels that I've spoken about on the 1 hour time frame and the 4 hour time frame, nothing else. Not the 30-minute, not the 15, not the 2 hour, not the 3 hour. I use this and I've tested this on the 1 hour mainly, like 90% of the time. I will take a trade on a level that's on the 1 hour frame, and 10% of the time I will use a 4 hour frame for the level. Okay, so keep those ratios in mind because they're definitely important, and we're gonna keep that on the top right corner. Now the market trades into our level. Now we go from the 1 hour, we zoom into the 5 minute. And this is the pattern that you're going to look for. So this over here is the level, right? Now the market comes into it and you're going to be looking for a few things. I'm going to draw it out first. We're going to then go through it slowly and then I'm going to be writing you the steps here on the left hand side. So let me draw this out for you. Okay, looks very simple over here, right? But here are different things that are happening that we're gonna be breaking down. So let me grab this tool. Number one, we want liquidity engineering, which is this segment of the pattern here, which can come in multiple forms. I've chosen consolidation just to illustrate that easily, but it could be trendline liquidity being squeezed. It could be swing low being taken into the level. It could be consolidation as I've shown you over here. After that, we have liquidity grab, which is this over here. So the clearing of the liquidity engineering over there. We then have displacement on the 5 minute that changes the character of the trend coming into the level. We then have a fair value gap creation over here. We then have a 50% plus pullback, and that's the entry right there. Okay, so now that we've gone through it, and I know that it may be rather confusing still, let's take a second here to write it down. So step number one is liquidity engineering. Step number two is liquidity grab of that engineering. Step number three is displacement plus 5 minute change of character or break in market structure, whatever you want to call it. It's essentially the same thing. Step number four is fair value gap creation. Step number five is tap into fair value gap plus 50% pullback. Right there. This is the sequence. This is the pattern. This is what you're going to be looking for if you're going to be trading these levels. Now, I warn you, most of my trades, I do not wait for anything. I simply place a limit order, and I have multiple confluences and checks that I need to confirm before doing so. But in most of my trades, I will simply place a limit order at the level with my stop loss being placed appropriately and my target being set appropriately as well. So keep that in mind, that in cases where I'm not entirely sure about the level that I'm trading and I don't want to blindly buy or sell it, I will then only look for this pattern. This is the only thing that I trade. My trading is become very, very simplified. I have two types of trades only. I have the limit trade, which is where I simply place the limit order over here in this case and expect the market to go down from there. And I have the confirmation trade, which is the vast minority of my trades, where in that case I would wait for that particular sequence to unfold, which is the one that I've shown you over here. Okay, I don't think I necessarily need to go over this in a bearish or bullish example again. So let's say as an example, I don't think I need um, to essentially print and show you this pattern for a bearish level, but you actually get the point now. So what we're going to be doing now is quickly drawing it opposite. Okay, so let's say we're looking at a bearish level here and we want to see the same pattern unfolding, so we would have the very same thing. In this case, instead of liquidity engineering with consolidation, we're going to use a swing so that you see that. So that would look something like this. You tap the level, liquidity swing being taken into it as such over here. Then you want to see displacement and break in market structure on the 5 minute, which you get that over here. At that point, you want to see, and let's actually do this a little bit better. You want to see the fair value gap creation, which may unfold over here. You want to see the pullback into it, and you want to then go short at the 50% plus pullback into the fair value gap. Same pattern, just shown on a bearish example. And with that being said, I hope that this made quite a bit of sense, because we're going to be jumping right back into the charts, going through the entire thought process that went through my mind on the GBP CAD trade, and essentially going over the pattern once again. So let me quickly pause the video and I will see you guys back on the charts with the last part of this video. Alright traders, so for this last segment of the video, we once again are back on the charts. This is the trade that was taken over here, and I'm going to be explaining you in detail everything that went for this trade. Now, I warn you that I'm looking for a long position here. I'm happy to place a limit order there, and I know that's far away, but that is why I now trade multiple markets, because I'm looking for the best possible entries, right? Using the same principles back time and time again. And I don't want to have to force myself to take anything less than I would ever want as a trade. So that is why I trade so many markets, because I'm happy to place limit orders at very specific levels that I deem as high probability trades. And I do that for every single market that I trade. I determine the levels and the areas where I want to be long and short. As an example, I had a limit order here at this particular level, and you can see the price traded into it and we bounced away from it. And another great example was actually, if I can find it, was Euro GBP, which had a beautiful trade this week, which is actually what I've just shown you. This particular level was great to be looking for longs into it, and you can see the reaction. But going back to the topic at hand, which is the GBP CAD trade, sorry. So that's over here. Let's break this down. So once again, I use mainly the 1 hour time frame. I don't necessarily need to use anything else. So this trade over here, first of all, the level that I've chosen was this one, and it was rather simple. We had a major swing high, and once again, if you measure the swing, you can see that this is a pretty significant swing. 600 pips in, 600 pips out of it, so you know that there's going to be a big liquidity pool resting above this high. Now, conveniently, above that swing high, the closest untested level was this wick low over here. Once again, the same example that I've shown you on the whiteboard. And if we do that, you can see it. We have, let's actually get red over here rather quickly. We have a wick low that has not been tested. We have this big impulsive candle that closed through all of these lows, and we've never came back into it. You can see that we tried here, but we left that untested. So as price is coming up, and this is 3 months later, and it's clearing this major swing into it, I am ready to short this market over here as we trade into it. But if you wanted to wait for the pattern, you see that it delivered beautifully, right? So this is where we clear the swing high. We can see a lot of mess, but once again, many trades to be capturing here if that is your style of trading, right? You can see this wick low that has not been tested. You get a beautiful move away from it, about 60 pips, so pretty significant. But once again, I waited for the level here, and let's go through the steps that I've shown you. First of all, liquidity engineering. We have that take place over here. Liquidity engineering is taking place right there. Consolidation. Then we have liquidity grab of that liquidity engineering. After that, displacement plus break of structure here on the 5-minute. Once we get that, we're then looking for the 50% pullback into the fair value gap. The fair value gap on the 5-minute forms over here. We then get the 50% plus pullback. If I get my fib tool, we can swing from this swing high to this swing low. We see that it is well above the 50. As a matter of fact, it is right on a 78, which is a great fib level that I tend to use very often. And after that, we then simply dropped. Now, why was my target where it was? Well, I'm entering on the 1 hour time frame. So my target is based on the 1 hour. And the 1 hour closest untested wick that closed through a specific level, we can see this bullish candle here was able to close through all of this segment here, and therefore the wick high that's on the left of it, which I've denoted in green, becomes my target. Now you can see the price went ahead and troubled much further than that, right? If I zoom out in the charts, you will see that price ended up traveling a lot lower, right? It could have been a 1 to 14. Now, I'm not worried about it at all because I want to have a good probability of my target hitting, and this is in my books the perfect target for this trade if I don't have something to tell me that I need to run these trades for days. And once again, it took a few hours to play out, but it eventually did. And you can be trailing stop losses on the way. You can be looking for multiple partial positions on the way as well. It all depends on what you want to do. I don't do it. I just let it run to target and I trade my stop loss on the way based on price action. And that's what I do now. So I hope that this provided you with help in terms of what is it that I'm trading now, why I was away. I'm going to be uploading a lot of content on this channel. So expect it because it's going to be great. I'm going to be opening a new service on Monday, most probably because I've been getting a lot of requests and I'm here to help you. So stay tuned for Monday. There's going to be a big announcement on Monday coming in, and stay tuned for tomorrow's video because I'm going to be uploading very, very frequently, explaining you guys what it is that I do now because I've simplified everything that I do, and it has become honestly very, very profitable. So I hope you enjoyed this video, guys. I will talk to you guys soon. I apologize for the delay on the uploads, and I'm very excited to be reading your comment section. So please, if you enjoyed it, leave a like, leave a comment, and I will see you guys very soon. Take care, everybody.